Hey everyone, it's Sean. Just wanted to come at you guys with our mid-February market update. Got a lot of good stuff going on. So always just wanted to give a couple shout outs here and give you guys a couple reminders. So first and foremost, congratulations to Tom Brady, Gronk, the rest of the Patriots South. I mean the Bucks on your Super Bowl win. Really amazing to watch what you guys accomplished. It's really great to see a team come together, focus on a goal, and accomplish it. So congrats to you guys. It was awesome. Me and my girls enjoyed watching that game. So congrats to you guys. Really proud of what you guys accomplished. Wishing everyone in school vacation week here in Massachusetts an amazing week. Hope everybody's enjoying some downtime with your kiddos. We're here at home base. It's a busy spring market. It's a lot of refinances and purchases, so we hung back. But all you guys that are posting on Facebook and Instagram and everything, whether you're skiing, whether you're off somewhere warm, I'm jealous, and I hope you guys are having fun. We've definitely all earned it. Good luck to all our friends down in Texas. On a serious note, the crazy ice and snow and all that stuff going on down there. I hope you guys are safe and get through this quickly. And then congrats, a little mortgage industry congratulations are in order. Congrats to our friends at UWM and Loan Depot on your recent IPOs. Really amazing to see what's going on in the mortgage business and seeing the growth and hopefully capital infusion that makes our client experience better for all our consumers out there and for everybody getting a mortgage, improved technology, resources, and just growth. So congrats to you guys, and congrats to our team at Guaranteed Rate. Really excited. We just made two major acquisitions. We got the people at Stearns joining our team and the people at owning.com. So I'm just really proud of what's going on here at Guaranteed Rate, to be a part of it for the last 10 years or so and watching the growth. I'm fired up and excited. So, welcome to the family. Like I said, our goal here is just to deliver a better client experience to our partners and our end user clients and just get better every single day. Transitioning, we got Souls for Souls. We're kicking that off again for this year. It's something that's near and dear to our heart. We've done for 3 years now. So each year our team partners up with Souls for Souls, and we are excited to announce our winter shoe drive in support of that organization. So, what Souls for Soul does, guys, is they turn unwanted shoes and clothing into opportunity by keeping them from going to waste and putting them to good use. So we'll be collecting gently used athletic shoes, hopefully not too stinky, at our Waltham office. If you're local and you'd like to donate or stop by, we're going to have a COVID-safe drop box out front, feel free to come by anytime with those masks on. If you're an agent or a partner and you'd like to participate, we'd love to invite you to join us. Just reach out to Nikki at nikki@rate.com, direct message her or email her, and she'll get you rolling on that as well. So we'd love to make this as big as possible. I can't imagine ever needing shoes. So, if people are in those type of situations, we want to be able to just support them and help our community. And then just a quick thank you. Over the last month, we've made a couple announcements that we're licensed in all 50 states. And it's been really just heartwarming and humbling to see kind of all of the referrals come in from all over the country. We're doing business in so many states already. So I just wanted to say thank you for all the trust in us in terms of just sending purchase clients our way, refinance clients our way in multiple states. So if you're a realtor and you've got a client relocating, obviously, please put them in touch with us. We'll deliver the same type of service you're used to getting from us anywhere in the country. We've been working on this for over a year. We're totally prepared and we're executing. If you're a client and you've been referred to us or you've found us online through our presence arrow, however you found us, we can help you with a purchase or refinance. Doesn't matter where you are. We're committed to delivering great service, products, and rates. And if you're a fellow loan officer and you're in this business and you're licensed maybe in none of the states, we're getting a lot of referrals from loan officers and loan originators all across the country, banks, whatnot. So we'd love to help your clients. I promise we will take great care of your clients and deliver the same type of service they're used to getting from you. And the goal is to make you guys look good and deliver for those clients. So thank you, guys. All right. What a day yesterday was, right after the holiday. So, we got a big rate update. So big wake-up call happened in the markets yesterday. The first big kind of volatile day in terms of rates ticking up on us. So it's just important not to fall asleep at the wheel and take these rates for granted. So I think we got lulled into sleep over the course of the last really 2 years of rates have been coming down steadily since the end of 2018. The bond market was shaky yesterday. So I definitely appreciate how low rates are now, and I appreciate that they're not going to stay this low forever. So I want to talk to you guys about what we're seeing. But we started seeing some trouble in the bond market on Friday afternoon. Okay, and we definitely were advising our clients to lock in, and we've been seeing upwards pressure and signals since the fall that has made us a little wary of rates going up. So we've been really advising our clients to lock in and take advantage of these really amazing rates. But definitely a wake-up call yesterday. So we officially had one of the toughest days in almost 6 months. Rates went up almost an eighth of a point just yesterday alone, and I'll talk about what that means in a second. they're now up about 0.25% off their all-time lows. So they're still amazing, but there's a lot of reason why the volatility is happening in these markets, and I just want to explain to you what's going on in the bond market and rate market so you guys have a good understanding. So most of it revolves around risks of inflation, and future inflation expectations are really the big talk that we're hearing. And also there's a lot of talk about higher crude oil prices, crude oil has been in the driver's seat, a lot of talk about that as well. So I'm going to dive into it. So stock markets around the world are in the midst of the longest rally in 17 years. So the Dow, if you didn't see yesterday, set an all-time record of over 31,000, an astonishing number, especially considering that we were down under 20,000 at the early parts of the pandemic last year. So yesterday set a record. Crude oil prices are holding near $60 a barrel. Generally, historically, when crude oil prices go up, rates tend to follow those. The price of Bitcoin, which I'm by no means a Bitcoin expert, but over 50,000 yesterday. And then gold is also was up to almost 2,000, hovering around 1,800, but that's near all-time highs for the price of gold as well. Home prices, you guys are well aware, have been really going up aggressively and forecasted for another almost 10% increase this year. So everything's getting more expensive everywhere around us, everywhere we look. So that's why there's a lot of inflation talk. All of this while the House Democrats are advancing President Biden's $1.9 trillion stimulus package. Remember, if this bill gets passed, there'll be almost now 2.7, 2.8 trillion in stimulus, right? When all said and done, assuming this bill passes, which is not a guarantee, but it looks like it's likely. And there's only been about $300 billion in estimated lost wages. So there's way more stimulus money than there's actually been lost wages. Now, obviously, we're happy to see stimulus and helping those that need it. But what means is that there's more money injected into our system and stimulus money being spent than lost. So there's just an oversupply of cash right now, and that's why there's fears of inflation, which is a real concern. Also, there's lots of money on the sideline. People have been saving. We've been talking about companies saving, consumers are saving. So it's going to create a lot of pent-up spending once the economy opens back up, which will also drive the price of things. Think about it. If you have money saved up, you're willing to, you're ready to get going again. You're willing to spend maybe a little bit more on something because your financial situation is a little bit better. So I think this will also drive inflation and prices up when the economy opens back up. So bottom line is, between all these things, there's trillions of dollars of treasury supply, which is expected to flood the bond market to pay for the stimulus package, and some elements of President Biden's policies pushing interest rates higher. Okay, so that's why there's lots of fear about rates starting to tick up a little bit. The House could pass the legislation as soon as next week. Obviously, there's no guarantees, but we should see. Right now, what's driving rates up and inflation talks up is that the speculation of the bill passing. Nonetheless, pressures on the bond market right now. Interest rates are poised to move slightly higher in 2021. I've been saying that in our last couple updates. Just remember, when you hear bond prices falling, that means rates are going up. And then lastly, there's been a lot of positive news on the coronavirus fight. So it gets us closer to an open economy and will improve unemployment, which will also help things. So COVID-19 cases in the U.S. fell to the lowest level in 4 months, and daily death rates also declined sharply. Some of the lowest numbers we've seen since October and November of 2020. Also, vaccination numbers have been increasing with boosts in supply to pharmacies and boosts in supply to states. And also, we're hearing every day that there's new vaccination sites set up. So also positive. And then the ultimate goal that we're hearing from the White House right now is inoculating most of the U.S. population by the end of the summer. So there's light at the end of the tunnel, which means that, as the economy opens up, things get back to normal. And normal is not rates in the 2s. Maybe it's rates in the 3s, which I think will probably hover in the high 2s, low 3s all next year. So more on that in a second. U.S. unemployment report for January came out about a week and a half ago. So this was also not a great report, in my opinion, due to the COVID surge that we had over the holidays. The headline looked positive, right? Unemployment rates fall from 6.7% down to 6.3%. Sounds like good news, right? Not so fast. Jobs created rose, that was good. 49,000 people got jobs, but much weaker than what was expected. And they also cut back the last 2 reports, revising the numbers downward by 159,000 jobs. So they were misstated the last couple of times, which is normal. It happens all the time. Interesting numbers that came out. Apparently, there's 10 million less jobs than there was in the U.S. pre-pandemic. So 10 million people are still unemployed or 10 million jobs are 10 million less jobs are available than pre-pandemic levels. So the Fed chairman Powell, he pointed out last week a misclassification error in the job market. So here's what he said: the misclassification revolves around workers being removed or not counted anymore towards the workforce numbers. So that means the real unemployment number rates could be as high as 9.9%. Definitely something to keep our eye on. On a positive note, however, both hourly earnings and weekly earnings were up, which has been a trend for the last few months. So people are actually that are working are making more money than they were before. So why is this important? Okay. In regards to rates are amazing right now, historically the best of all time. So we might not see 2020 or early 2021 numbers forever, maybe not even later this year as things get back to normal and our economy goes back to normal and we get past this pandemic. However, it's important not to miss out and fall asleep at the wheel. If you haven't refinanced, you should be. If you're considering buying, it's really important to realize how much affordability these low rates create. So time to get on it. So it's important to take advantage of it and how you can improve your budget. If you own a home, refinance, create your own stimulus. Debt cash out for home improvements has been happening a lot. Debt consolidation. I'm seeing a lot of people take advantage of wiping out all their high interest rate debt and decreasing your monthly budget. If you're in the market to buy a home, low rates improve affordability, even in the midst of home prices increasing, which I'm going to explain in a second. So the misleading headline we're seeing a lot of right now that I see in the news all the time is housing's getting crazy. There's going to be a bubble. It's getting too expensive. Also, not so fast on that one. It's not necessarily true. So most analysts only look at 2 or 3 elements that make up the affordability equation, guys. So they look at price and income. So it's true that income hasn't kept up with the price of houses. However, affordability is about the cost of the house, not just the price. For that reason, mortgage rates, the third element of the affordability equation, are important to consider. So bottom line is housing is more affordable, even with home prices going up than it was a few years ago, because the combination of low rates and income increasing has really kept leveled that playing field. So bottom line for you guys as consumers, what happened yesterday and what could happen is every time rates tick up 1/8 of a point, here's what happens to my clients. They lose about $40 in potential savings, so their mortgage payment increases $40 based on the new mortgage plan they're going to take. Or if you're going to buy a home, you lose about $10,000 in buying power. So it's powerful stuff, and it's important to just, I think you can tell to take advantage of this current market and take advantage of the rates that we're seeing right now, because we might not ever see them again. My opinion is the Fed's going to do everything in their power to keep rates low. I think the strength of the housing market is super important to them, and I think they realize it really supports the rest of the economy and has an overflow into the rest of the economy. They're going to use the job numbers to leverage low rate policy. So I think they're going to ramp up an already aggressive bond buying policy to deal with the trillions of dollars of treasuries that are going to flood the market. They're going to figure out a way to keep that market going and keep rates low. I think they're going to keep their interest rate policy at near zero for years and even cut when necessary, which is kind of crazy to think about because at the levels they're at right now. And remember, Janet Yellen is now Treasury Secretary. So, based on her time as Fed chairman, she loves stimulus. She loves a low rate environment. And, she did a great job in boosting up our stock market and getting us ready for, and impacting the housing market. So I don't think there's a stimulus plan and rate low enough. I think she's a big proponent of that for her. So I think that's definitely going to help in terms of keeping rates low. So I don't see like this massive increase in rates. I think they'll be coming off some of these lows. So my prediction is that rates are going to remain low in 2021, just not as low as maybe we saw in 2020. I think we'll see high 2s and low 3s hover. I think we'll see some spikes and maybe a pullback right now where it seems like we're in a rising rate environment, maybe in the short term. In the market, I always like to give you guys a quick recap of what we're seeing right now. So the average 30-year fixed rate is at about 2.875 on a 30-year fixed rate with no points. That's super low. It's ridiculous. I never thought we'd see it, and it's at historical levels. Refinance demand's up 46% year over year. You're just getting phone calls flooded every single day about people refinancing, and in a lot of cases, refinancing for the second or third time just in the last few years. Take advantage of lower rates and payments. Purchase applications are up 17% year over year, so massive demand both in refinances and purchases. Inventory is down 23% year over year, so there's less supply, more demand. It's creating bidding wars in almost 50% of the new listings, and the days on market are about a week less than they were at this time last year. So a much more cutthroat environment, which is going to lead to home price appreciation. We're predicting of almost 10% in 2021. So that's a little recap of what we're expecting for this year and what's going on right now. So if you're a consumer in the market, here's what you can do. I always like to give you guys a quick tip. So working with pros, find the best in your market, find the best mortgage person, find the best attorney, find the best home inspectors, get prepared, and find the best realtor. There's never been a time, in my opinion, where having a great real estate agent, the best in the market, and is important than now. It's competitive, it's cutthroat. You need somebody that's going to give you great advice, that has access to information, has negotiating skills, has access to inventory, that it knows what's coming on the market, knows the inventory inside and out, and just can be there as a support system for you, because it's not easy. Game plan and have goals, know where you want to go, know what you want. I think casting a wider net is important right now. Educate yourself on how the entire process works before you're in it. The pros will teach you kind of everything you need to know, as if you're already in it. They can explain it to you, so it slows the process down and has you prepared. Know your numbers and your budget. You should be able to recite what your max pre-approval is, what your comfort zone is, what your monthly payments are, what your down payment are, what kind of loan programs you have, what you should be budgeting for closing costs and escrows. Knowing those things slows the process down and gets you better prepared for what could be a bidding war or fast-moving process. Our goal, as I always say, is we want you prepared, we want you confident, we want you knowledgeable, we want you empowered, and we want you to win, right? That's important to us. So as always, if you have any questions about anything I covered today, guys, direct message me on any of our social media platforms. I try to respond right away. You can always email me at shant@rate.com. If you're a consumer and you want to get started on a refinance or a purchase application, you can always go to my website at shantgr.com, click apply now. It's super easy. Our digital mortgage application couldn't be easier, and we'll arrange a call with you right away. But as always, I appreciate you guys listening in today. Hope you guys are having a great week. Stay safe, stay healthy, and stay happy. Have a great week, guys.